Welcome to our channel, where we equip you with the knowledge to excel in the stock market. If you're committed to enhancing your trading abilities, you've come to the right place. In our previous episode, we explored moving averages, the Heikin Ashi chart, the Supertrend indicator, and the EMA crossover 20 and 1950, discussing how they can refine your trading strategy. Today, we'll be focusing on the RSI indicator, what it is, how it works, and why it's essential for both traders and investors. Let's dive right in. RSI, or the Relative Strength Index, is a momentum oscillator that measures the speed and change of price movements. It ranges from 0 to 100 and helps traders identify overbought and oversold conditions in a stock or asset. An RSI above 70 suggests that the asset may be overbought and could be due for a correction. An RSI below 30 indicates that the asset may be oversold and could experience a rebound. Typically, traders use RSI to confirm trends and identify potential reversal points. Now, let's talk about the exponential moving average, EMA, and why it's a key tool in trading. The EMA places more emphasis on recent price data, making it more responsive to price changes compared to the simple moving average, SMA. Traders use EMA crossovers, such as the 20-day and 50-day EMA, to spot potential trend changes. So, how does RSI help? RSI can act as a confirmation tool when used alongside EMA crossovers. For instance, if the 20-day EMA crosses above the 50-day EMA while RSI is above 50, it signals a strong bullish trend. Conversely, if the 20-day EMA crosses below the 50-day EMA and RSI is below 50, it indicates bearish momentum. RSI divergence can also provide early warnings of potential trend reversals even before the EMA crossover occurs. RSI is valuable for both short-term traders and long-term investors. For traders, RSI is commonly used for swing trading and intraday trading to time entries and exits more effectively. A short-term trader might buy when RSI recovers from oversold levels and sell when it reaches overbought zones. For investors, RSI helps investors identify potential buying opportunities in strong fundamental stocks that have temporarily dipped into oversold conditions. However, it is important to remember that no indicator is foolproof. RSI works best when combined with other technical analysis tools like the Supertrend indicator, Heikin Ashi, EMA crossover, or MACD. Always test your strategies in a demo account before risking real capital. That wraps up today's discussion on the RSI indicator. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss our latest trading insights. If you have any questions or want us to cover a specific topic, drop a comment below. Thank you for watching, and we'll see you in the next video. Wishing you successful trading.